Thank you, John and Khalil. Before I open the floor, I just have to set up some general rules for the discussions. Let's not have a debate as such. Let's have a session of questions and get the answers to those questions for you to benefit from each other's questions that you might have, in order to later on supply the CMA with your written comments and your written remarks. That will be taken into consideration in the analysis of the final draft of these regulations. So the floor is open. So we can start and okay.
Hi. We are already a registered institution and we are licensed under category number 1. So my question is, if I take a look in here to the licensing and registrations, it goes, we have 5 categories, the new 5 categories. Does that mean that we automatically can do those 5, I mean, do we go under those 5 categories since we are already licensed and we are category 1 with the old system? That's what I mean. And my other question is regarding the exams. It says in here for the main departments. My question is, what do you mean by main departments? Marketing department, web developing department, HR department, or just what are the main departments that we are talking about? Thank you. Sorry, I just want to make one more thing. It says in here, for the introducing brokerage where these operations are restricted to, go ahead, are not applicable. What do you mean by not applicable? It doesn't exist anymore? We cannot be introducing brokerage anymore?
Okay, let me take a stab if you don't mind, and please jump in, John. First of all, the question relevant towards the, I think you mentioned the marketing department or whatever. The registrable functions, there is an annex in the regulation which is Annex 5. So in Annex 5, it lists exactly the 10 registrable functions, and even under the client representative, in that sections, we even, the drafter, compiled and captured all the different positions that goes under a client representative. So what you see in front of you is exactly what is required to sit for exams or the qualifications for those registrable functions. So they are only 10. So that's that part of the question, and I hope I've addressed it. The other part, as far as your existing license and the services that you are offering at the present time. So in the old regime, you get a license, for example, which allows you as an institution to provide all the activities within or under that particular pillar. So if you refer to Annex 6 in the same regulation that we're talking about today, what Mr. Carson has done is worked on trying to make your life easy in understanding if you were doing that particular side of the business as to where it would fall under those 5 particular licenses that we're talking about. Correct. So the introducing broker is something that we actually wrestled with a lot. And with the old circular, BDL circular, it defines an introducing broker as exactly an individual that would refer a business or a client from to a certain institution, and his role will be over. There is no activity, according to the old circular, that allows the introducer to be involved in any type of activity. Once he refers the business, his role is over, right? This is the old regime. So when we looked at it objectively and we said, okay, if we're gonna look at it from that angle and the role is nothing anymore, he refers and that's it, why does he have to have a license, right? So if the scope of the regulation is going to go towards having an introducing broker that he introduces but maintains the capability of advising the client or the capability of doing other variety of things within the 5 licenses that we've got, then it's a totally different structure. So we said and decided back then, and this is something that was literally, we anguished over for a long period of time, and we made the recommendation to the board, and the board also discussed it, and we decided that introducing broker is an activity that no longer requires a license, so anyone can still do it. So we're not suggesting that if you've done it in the past, you're not allowed to do it anymore. There are boutiques out there in Beirut that refers businesses to banks in Beirut, and they are not licensed entities. These are individuals that just say and have a side agreement with institutions. All what I'm doing is refer you to a client, and he gets, whether it's a one-time payment fee or whether it's continuous. To give you an idea, in Saudi, the Saudi law doesn't even touch base on those, and I had major discussions at one point in time with the regulator in a previous life, where we even said, or the regulation, that if the individual that's getting a fee is going to be continuous, then he requires to be licensed. So we're not even going there. So here we're saying the introducing business is still there, but you are not required to have a license for it.
But let's just clarify that if by introducing broker, some people mean a concept where there's an ongoing relationship with the client to provide advice or process trades or transactions, then you do have to be licensed for dealing, for advising, or whatever it might be.
Excuse me, just please state your name and the name of your institution.
My name is Jean Riachi. I'm the CEO of FFA Private Bank. I'm also chairing the Capital Market Commissions of the Association of Banks in Lebanon. First of all, I would like to congratulate you because this is plain language, this is very clear, and I hope, and we're very happy that we have these discussions. There are many details in the regulation that we would like to discuss, but it's not the day today. We'll do it institutionally through the ABL Commission. I wanted to discuss the introducing brokers thing. Actually, the regulation, the old regulation with the central bank, the meaning of introducing broker is closer to what you call arranging today, meaning an institution, an approved institution, would introduce its clients to a third-party institution in Lebanon or outside Lebanon, without dealing directly. It would be arranging deals without providing custody directly. It would be arranging custody. So I think the introducing brokerage business in the meaning that the lady there was talking about would fall under the arranging license. Now, what you said about introducing brokers who are individuals is very interesting because we had some limitations as how to deal with people who would introduce business to us and get a remuneration on this, and we had a real problem. So I think what John said is interesting, that if this guy is providing advice and providing guidance to the client, maybe there is a problem, but if he's just introducing a client, he shouldn't be licensed, and I think this is what should be done. By the way, I've seen that for the license of custody, you are mixing arranging custody with providing custody, and I think this might cause a problem because you don't need to have the same requirements when you arrange custody and when you provide custody. I think it's a whole lot of set of resources that are different. So there might be something here that should be changed, in my view. One more thing. I didn't quite understand the licensing for existing firms. So is it that for existing firms who are licensed by the central bank, and are performing certain functions that were sent to you because you required that we tell you what we do today, does it mean that we don't need to, again, apply for a license for these functions? Thank you.
Let me take a stab at a couple of those things. First of all, thank you for your point about mixing arranging and custody to some degree. I think that's a good point, and I think we should have another look at the wording of that particular part of the explanation, if you will, of custody. So hopefully we're capturing all these comments. Secondly, with respect to existing institutions, I mean, the basic purpose here is not to vet the institution because obviously they're in good standing with the regulator currently. The purpose of the process is to get the institution registered with the CMA in the proper categories, and that's basically it. There is the ancillary need that Halil alluded to, which is to use this as well as a way to try to ensure that institutions come into compliance with the new business conduct regulations, and that basically is the reference to filing of manuals. But the purpose here is really to get the firm registered with the CMA, which sets up the ongoing relationship, and to apply those 5 categories of license. So each institution will tell the CMA which of the 5 categories it's currently operating in, and the process will follow accordingly.
Just one word on introducing broker, just to make it as simple as possible. Most of the bankers available here have heard of this introducing broker on day-to-day basis. I come from the banking industry, and I know you have people who come to the bank, they have nothing to do with it, they're not employed, they're not licensed or anything. They bring a client with a large deposit and they take a commission and they go home. This is what we mean by introducing broker and no need for a license. And that's as simple as that, I suppose. Okay, Shahdan.
Shahdan Jubaili Bankaudi. First, let me join my friend in congratulating you for the professional and world-class work, and yet taking in consideration the situation of the market in Lebanon. I also had a general question on the situation of existing bank, which was addressed in terms of activity which are taking place or may take place in the future. I had another question on if you could expand on what is the meaning of non-discretionary management portfolio that is covered under the regulation. Thank you.
Okay. Thank you. As you know, usually the business activity is being conducted either on a discretionary or non-discretionary basis, and I would like to take this opportunity and use your, like as a walk-in for a couple of things. So when we talk about a non-discretionary orders or non-discretionary relationship, it takes us down the aisle that the client is literally sometimes appealing to an authorized institution and asking this institution, I'm sorry, I'm giving you my wrong side of the neck. So it's when he is applying for an approved institution to deal with them on a discretionary basis. So some people look at it from a mutual fund side of the business. So, and whereby the client will be exposed to that particular fund manager's mandate and would rely on the regulator to make sure that the regulator is policing this particular business activity, and the client, all what he sees on his statements is the net asset value, which is reflected by the number of units that he's got. And obviously, he follows it from there. The other type of discretionary activity that is or could be conducted is where you have a client reaching out to the advisor or the registered representative and asks him if he's qualified, obviously, or the bank or the financial institution may have a department that is specialized in managing the portfolio of a client, along the lines where the client would fill a very detailed profile form, and based on that profile form, he may be able to refine and fine-tune as to what are the things he does not want that particular manager to capture in his portfolio. So you may have an employee, let's say, using an example, Solidaire. So he's employed with Solidaire and he's got stock of Solidaire, and he wants the manager to run a portfolio for him and manage it for him. But he'll tell him, listen, I'm already exposed to this particular company. I don't want you to invest in it. So that particular client will be able to see transaction by transaction what's going on in his account on a contract basis, and periodically through the statement, which we will be touching base on the next day. The non-discretionary basis is a relationship where the client is literally wants to make sure that even though he's getting an advice from a registered representative, the ultimate say is going to be his. So before an order goes or a transaction goes in his account, he wants to take that decision. So this is one category under the non-discretionary. The second category is when we are dealing with an execution-only client. So this is a client calls in, he doesn't want an advice. So he calls in, places his orders, thank you very much, and no advice is given. And then there's the third one, which is along the lines of, we call it a kind of an exempt or professional client, which mainly is towards institutions that already have the experience to do all the necessary analysis before a transaction goes in. Did that answer your question, Mr. Jubaili?
My question is really on the combination of the two words, non-discretionary yet management.
Yeah, I think that it is an odd combination. But it was picked up, I believe, from the Circular 27 and carried over. Correct? So it's still there. I think the best explanation of it is the one that Halil provided, where you have a client who essentially wants somebody to manage a portfolio for him or her, but still wants the final say.
In a nutshell, you're absolutely correct. And that particular section will be deleted.
Thank you.
I have a question there, please.
Good afternoon. Samer Mirai Kadiliz. Regarding the introducing broker, I would like to ask if it could be a company or a firm, like a sales and business development firm that has its own sales strategies and techniques. Not just a person.
The regulation does not specify if it's a person, it's the activity that counts. So yes, it can be an institution. There's no restriction on that.
Thank you very much.
Yes, please.
This one.
Please. Carlos Abu Jawde, lawyer. We're addressing here three issues: the compliance, the registration and licensing, market conduct, and business conduct. I'm sure that all the work that has been done on regulations, compliance is great. But this will push corporations or licensed corporations to enhance governance and compliance. This will add huge cost to their operations. Typically, this morning, the governor spoke about attractiveness. Will there be any tax incentives given at any point in time in some way, i.e. for these authorized institutions, to allocate some tax incentives in case they carry out business or facilitate business to go to the market
to be able to fund their compliance, etc., because the cost is substantial. So the more we go into business conduct and compliance, the more the operating expenses on this side of the business will increase. So the question, are we foreseeing any tax incentives, not only to companies that will engage?
Okay, this is, I think it's a board's question, literally. Yes, we are definitely considering incentives of all kinds, not only tax incentives, whatever incentives possible in order to develop the market, in order to help enhance the performance and the attractiveness to the market. We will certainly look at these things.
Sorry, I'm not talking about only attractive to the market.
No,
this will be done. This is an independent effort that not necessarily
no,
done
attractive,
by this.
I mean by attractive is to attract the companies to come into the market, okay?
No, other than attracting the companies to come to the market, to attract
To apply.
To attract the institutions to register in most of the categories, to adhere to the business conduct regulation, etc.
This will be certainly a consideration from day one. And I mentioned it in my short word this morning, just to give time and the cost considerations. Okay.
I want to just make a comment on your cost comment, if you will. Mainly this pertains to the contents of the regulation that we're going to discuss tomorrow, the business conduct regulation. And as I said by way of introduction, we have tried to strike a reasonable balance here in designing these regulations and not go overboard in terms of introducing new costs. And to that end, you know, it appears that a large part of what you will see in the business conduct regulation is also already required by BDL circulars. So then the $64,000 question, as we say, is how will those requirements be interpreted by the authority? And this is something that we will be working on as we develop our operations manuals, but it is also very properly a subject of specific comment that we could use from you, from the institutions. So if you have a concern in reading the business conduct regulation about the apparent costs or the burden of complying with those regulations as against to what you're required to do today, if you can tell us about those concerns with specificity, that would be helpful.
Please, maybe the question wasn't to reduce cost. Because the CMA has a push, it can be a mean to lobby to get some incentives to help the financial institutions to adapt to the code. It's not to reduce.
I would like to add one word about taxation. I don't know if you're aware, we're living a nightmare with the Ministry of Finance about how the income on portfolios is taxed. It's confused, it's arbitrary, and I think it's within the law, it's the role of the CMA to work with the state about these issues. So there's something to be done on this.
Certainly well taken, and we are very aware. And Vice President is behind you, Vice Chairman is behind you, and he's the expert on that.
We are aware of all these issues with regards to taxation, and it's actually within our law that the government needs to consult with us before any taxation is imposed on any of the financial institutions. Yeah, I mean, yes, we're aware of this. However, considering the political situation, we're not able to maneuver much. That's the only hurdle we have today. We promise you, John, will be.
Ali Abbas, Citibank. Two questions. The first one related to the authorization, and the second one related to the trainings. The first one, with the authorization process, specifically under the circular number 4, you have issued the CMA with respect to companies with a proceed between 30 billion and 100 billion and above 100 billion that are not listed where the shares are traded under on the OTC market. Are these under the authorization of the CMA? And the second one is related to training. We noted that the risk and the legal regulations are not embedded in the 4 categories you have mentioned, specifically with the link to the compliance, and the AML part with the compliance, which is only related to or linked with the AML officer and not the compliance officer. Thank you.
Circular, you want to address?
Can you rephrase, please, your question? You are talking about the OTC that has more than 20 shareholders?
Exactly, yes.
They are under the CMA to a certain extent because their subject, their activity are not a financial activity always. So for the disclosure, for certain requirement they are, and for others no. Do you want to know specifically what's from which regulation you're talking about? No, authorization not. Authorization not, of course.
The regulatory part rather than the authorization part.
The authorization not, because most of the activity of those companies are not financial.
Exactly. Mm-hmm.
But for example, for the disclosure to their client, for the disclosure to their shareholder, yes.
Yeah.
For the insider trading part, you will see it tomorrow. For certain business conduct also, but not for the registration and the activity, because their activity are not financial.
Right. So just to be clear, today we're talking about approved institutions, which are securities dealers or investment dealers. As I understand it, you're talking about issuers of securities, companies that are traded on the stock market. These regulations don't apply to them. There are certain aspects of the market conduct regulations you'll hear about tomorrow which are relevant, because we need to define which traded markets those regulations apply to. But most of the rules that you're alluding to that issuers of securities need to comply with will be in the securities offering and listing rules, which we have yet to finalize and present. And those will also contain the regulations on corporate governance of public companies, disclosure requirements for public companies, and so on.
Thanks.
Hi.
Related to the training, the question was related to the training.
Sorry,
the 103. The other question was related to the training.
Yeah, what exactly is specifically your question is about the 103?
The risk management and the legal, Lebanese legal regulations are not embedded in the 4 categories you have mentioned.
The risk management officer is number 7 on the slide.
For the A, B, C, and D.
These are the set of exams. So, I mean, sorry if it wasn't clear. To the right-hand side, these are the set of exams, and number 1 would be the securities, the second is the derivative, third is the AML and the business conduct. So these are the 4 exams that I referred to during my presentation. So securities exam A, I thought it was clear, my apologies. So under risk management officer, he would be required to go under those 4 exams, the A, B, C, and D.
There are only 4 exams.
Correct. We're going down from 9 to 4. And on certain functions from 6 down to 3. Now, the only person that is affected, and to be honest, like we looked at it closely, like certain risk officers are required now to do more exams, because I was a bit surprised, like let's say we would have a compliance officer, and this compliance officer that has a responsibility of supervising the day-to-day activity of the staff, the registered persons, or sometimes, depending on how sophisticated and active the institution is, the fund manager or the discretionary individual. And if this compliance officer doesn't understand, for example, derivatives, right, how would he be able to comprehend what's going on? And in the previous regime, certain functions were not required, as an example. So we looked even, like we went into the curriculum, we went down to ISA. So it's not something we took it like with a knee-jerk reaction, let's slash 6 and go down to 4 and let's do ABC instead of EFG. So we looked at the curriculum and we chose what we feel is best. Now keep in mind, this is something I was hoping I'm going to get a question. So far I haven't heard it, so I don't want to lose it. Like, will we be now reducing the exams just to hike it up a couple of months later? Actually, this is certainly not the objective, but certainly with the business and how it's evolving, there will be a continued business education program which will require certain regulatory functions to learn and to be updated on a lot of things. Now, how to get there is different. Do we do it online? Do we do it on as an open book? I mean, I remember I lived a big chunk of my life in Canada, and it was open, it was online. You used to have to take X number of credits per year, and they would give you options. Do you want it in compliance? Do you want it in HR? Do you want it in corporate governance? So the option is there to the candidate unless there is a specific deficiency within the financial markets where the regulator would jump in and say, okay, I just want to make sure everyone knows this.
You have missed the internal auditor here. I can't see it on the draft, but it goes under senior manager.
I mean, first of all, an internal audit, as you may recall from the regulation, is a kind, not a required function. According to this current draft, it is a kind of an option, but we said that the CMA may require that particular function to be there based on the complexity of the business, right?
I thought you were talking about the unit more than the function itself, when you talk about the scale and the function and the complexity of the activity of each institution.
I mean, valid comment. We'll take it under advisory. Thank you very much.
Most probably it will still be covered from the BDL side, because it is mandatory for bank to have this function.
We're not a bank, we're a brokerage firm.
No, yes, so for brokerage firm it is not mandatory so far. But
Okay.
we'll see it,
Hello. Hi,
You
Khalid
okay?
Zaidan from Med Securities. I have just two questions.
Okay, thank you. Thank you. We will.
I have two questions I'd like to pose on to the gentleman. The first one actually is the existing regime for the licensing includes obviously a license of an entity, whether it's a brokerage firm, a financial institution, investment bank, or a bank, matched with the capital requirement and the activities that you can actually conduct under each and every one of those licenses. Are we going to receive from the CMA in the coming weeks or months anything that would marry the new activity list with the type of institution that is allowed to do this activity, and if there are any additional capital requirements necessary for each and every one of the different businesses?
Okay, to respond to that, any institution that can qualify as an approved institution may carry out any of the 5 activities if their application demonstrates that they're qualified and set up to carry out that particular type of business. In terms of the capital requirement and the prudential requirements, yes, those will be tied to the type of business. In fact, it's set out in draft form without specific numbers in the draft licensing regulation. But as we announced at the outset, we have not yet got to the point of deciding our strategy and approach to prudential and capital regulations. So when that is determined and those regulations are drafted, the answer to that question will be available.
Okay. I have a second question, if you don't mind. There is no mention of lending against securities in the existing drafts that we've received, does that implicitly imply that that activity will remain to be governed and supervised by the Banking Control Commission and the BDL?
No, at least as we propose it, lending of securities is a securities activity, and in fact, lending of securities is covered in the business conduct regulation that we'll be discussing tomorrow.
Thank you.
Khalid, sorry, if I may, I just want to make sure we're clear. Your question, are we talking about lending on the commercial side of the banking, or lending from a margin?
No, I'm specifically asking about lending against securities for the purpose of buying additional securities.
Correct. So that's fine. Thank you. I just want to make sure it's clear. Thank you, Doctor. Yes.
Nadine Khatib from Alman Associates Law Firm. My question might sound a bit more academic than probably practical, but I was wondering if the CMA would have any supervision over credit rating agencies' business. I know they're not established in Lebanon, but they will be performing business securities activities for persons in Lebanon, whether investors or the issuers themselves, and specifically in relation to the conflict of interests.
Okay, I'll attempt to answer your question, even though it's not academic. Mainly the regulation, I think somewhere, and jump in, John. The regulations which you have in front of you certainly does not cover rating agencies.
Exactly, not advisors.
But Law 161 clearly states that the CMA supervises the activities or the activities or licensing, if you may. I don't know if it's licensing, to be honest, and establishment, thank you, Colleen, of rating agencies. So we're not there yet.
Yeah. We just didn't think it was a priority yet because we don't have any demand, but we were planning to regulate it,
Thank you.
but not as a priority.
Ahmed Khatib, I'm the CEO of Amana Capital. It was mentioned that registration and regulation approval would apply to foreign institutions doing business. Does that mean even foreign institutions doing business in Lebanon without being physically present here,
No.
without having offices?
No.
What's the differentiation between that for foreign?
Sorry, carry on.
Well, the theory, at least, is that if institutions are actively marketing securities to clients in Lebanon, they should be licensed. Now, the practical application of that is obviously fraught with difficulty, but that's the principle.
If I may continue on this. We had in Saudi, and majority of the team of Bank Audi that I know, or other institutions, we had a kind of a metaphor they used, tujar shanta, where people would land in and literally sell, prospect and solicit, and sometimes they have such a vivid imagination, if I may, where they would send the forms even electronic, and they go in because they started putting those cops, if you may, at the airport just to go through bags and make sure there's no documentation. It happened even between Geneva and France at one point in time. So the moral of the story, I think the regulation is clear. Even they say explicitly that the institution should have a presence, or the registered person should have a residency in Lebanon. So will we be able to police everyone? And it becomes such a kind of a vague issue whereby someone can say, you know what, I didn't come to Lebanon, the client flew to Geneva, and I was just passing by. Excuse me? Even online for that matter. So we know that with this day and age of communication and marketing, which we will be touching base on tomorrow as well, between, and I think it's in the business conduct, we may literally touch base on that particular topic.
Yeah, and this is a controversial topic in any jurisdiction, actually. So online, for example, I mean, one can always take the view that it's the client that has sought out the service. So really the question becomes, is somebody actively marketing securities business in Lebanon? In my opinion, this regulation or any licensing requirement would not apply to a situation where there's an online service available on the internet and the client reaches out to it. Correct. The point was you can go off advertising, which goes back to my comment about the definition of a securities advertisement.
Because as you know, Mr. Riashi, the securities advertisement, there's the two types. There's the prepared one, right? And this is something we're going to cover tomorrow. And there's the one that's conducted over the phone or by meeting clients one-on-one.
Nadi Najjar, lawyer. I'm a bit confused by the definition of the controller. The second test of this definition defines it as someone, a person who has the right to appoint 25% or more of the board. Is it limited to person first or entity? And actually, what do you mean by having the right to appoint? So does this entity or person has already nominees in the board, or they have technically the right to appoint? And then again, what's meant by the right? Thank you.
This is something, I think that's there to cover off a situation where the stock does not clearly carry one share, one vote, or there's some kind of arrangement where, in spite of the shareholding structure, by an agreement, one person has the right to appoint that percentage of the board. For example, through a shareholders agreement amongst a group of shareholders.
Thank you, but does it mean, I think in Lebanon, one share is one vote, not really, except fraction. And second, you mean that you need to have a look at shareholder agreements, and that would be required from investing entities. And then again, we would need maybe to add entities to person, because most of the time there are entities that are subscribing to this kind of agreements.
Yes, good. Fair point regarding the one share, one vote. A person is defined to mean generally either an individual or an entity, a company.
Thank you.
Hello, Omar Baltaji, Beirut Brokerage. Laws and regulations are so important for development. I have 3 questions, not trying to be criticized. I'm not trying to criticize, just for being clear. I mean, what's the trigger for launching the new laws? Will those new laws be helping to make the Lebanese stock market more appealing for investors? Will you be introducing or like giving incentive for market makers in those in the stock market? And what's your forecast for the Lebanese stock market? Thank you.
If you don't mind, I'll attempt to take a stab at the first couple. As to why, I think the first question as to why now?
Yeah,
correct.
That trigger, right?
Yeah. I mean, obviously, if you look at it in the context of the region, we're probably among the few left that are not part of IOSCO membership. And to be part of IOSCO, you have to have a system in place where best business practice is in place. And the governor, looking at it from, if you recall a little bit his speech in the morning, being the commander-in-chief, in a sense, correlating or getting the input and feedback from different pillars of the business, he felt that it is quite important for us now, even though we could be, in a sense, late to join the wagon, if you may, but it's better late than never, and that it is very important to be part of that organization. One. And number two, the World Bank, with their assistance, and thank you for their effort in organizing the team of experts to help us, even from a subsidy point of view, to get us to where we were versus where we are in the drafting of these rules and regulations as we speak. So this is the why now. I think the second one was?
Will you be trying to help with the stock market, improving the Lebanese stock market?
Okay, I mean, I come from a school of thought, personally, that, I mean, people would ask, which one comes first, the chicken or the egg, right? Like, in a sense, do you wait till the market starts improving and then you start introducing the regulations? Or because, I mean, I've got the tendency, and I've heard certain vibes from the market, honestly, that you guys, listen, the market is hardly moving, we're hardly having any transactions going on, and you're implementing these new regulations, and this probably is going to put a full brake on the system that's hardly moving. My opinion on the matter, and this is based on experience working in several countries, is that if an investor, and I think it was John and the governor touched base on this, and if the investor doesn't feel that he is protected or that he is investing in a market where there is a regulator, would make sure that if there's a mandate to a fund manager, that this mandate is going to be respected. If there's going to be a compliance and supervision on the activity of their registered person, if that registered person is qualified to conduct business, and it goes on and on and on. So, and it trickles down all the way down to the Beirut Stock Exchange, right? So when we are conducting surveillance system, and once again, we're the new kids on the block, and we're getting the complaints from the clients, and with association and working closely with the Beirut Stock Exchange, and we're able to literally send a message, and nobody's accusing anyone, obviously, that actually there is a surveillance system in place to make sure that the price manipulation, which is a topic we'll be covering tomorrow, or insider trading pattern, is being monitored and it is regulated. I think this will build the required confidence for Gulf investors or international investors to start thinking, deploying part of their capital in the region.
If I could just add to that, though, on the market development side, let's remind everybody that a significant part of this first project is the market development master plan, if I can use that word, that Gabriel mentioned in his remarks in the introduction. So we are going to have a significant focus on how to develop this market and what the strategy should be. What this is all about is getting the platform in place so that we can build on it. I want to just comment on your market maker suggestion. You know, in a market that's a liquid, I think market making could be an extremely important service, but I think that should be a function of an actual marketplace. Meaning, for example, the Beirut Stock Exchange or another trading platform. I think those are the people who should be putting the market-making structure into place.
May I add something to the development of the stock exchange? We're not the only players. The government is a major player in this, and the law is clear. The law has actually required that the government, and gave the government a period slot of 1 year to before privatization, to change the stock exchange from a government institution to a joint stock, meaning a CEO, a board, an autonomous entity that can decide, that can develop, a CEO that can carry his bag, go around, invite family-owned businesses to list. This is a must. We can do our part, but then the government needs to do their part too. Now, this was hanging between the situation of the government. And the law stipulates that the government needs 1 year after that to privatize. 2 years now, nothing has happened. We still have a government institution that's called the Beirut Stock Exchange without a CEO. I mean, the CEO is actually by default there. He's not the CEO, he's helping, he's filling in. We don't have a CEO. This is one side of the puzzle. The other side, what we're doing is we're going ahead, we're doing our part, we're building it, we're doing the regulation. In fact, our board just approved last week to purchase a state-of-the-art surveillance system from one of the major NASDAQ. Well, I didn't want to name it, but fine, it's NASDAQ. Thanks, Khalil. We are going ahead. We're spending money, and we're just waiting for government to do their part. We can't develop on our own. Plus, the law says we have to develop the capital markets. We can't develop it alone if tomorrow government wakes up and starts taxing our industry. They'll be breaking the law, our law. So this is where we're stuck.
And what's your forecast?
Okay, I'm not licensed to do forecasts.
And neither am I.
Hello. Yeah. Rami Jusser, Auda Investment Bank. Just two comments on the way the activities are organized under the regulations. The first comment is, as a matter of principle, it would be good to have any single business be licensed by one activity. One thought comes to mind here when I was reading it. Mergers and acquisition advisory falls under it seems to fall under two different licenses, arranging and advising. It would be good if there's only one requirement or one set of licenses that applies, because otherwise in the future there might be other complications in respect to which one do we comply, do we need to have two heads for this and that, etc. This is one thing. On the other one, with regard to all the activities, and in order to, I mean, at the end of the day, as players, we are interested to have a lot of more depth in the market. More depth means more players. And more players requires that the barriers of entry are lowered. One way to do that is possibly to distinguish across all activities those entities that handle client money from those who do not, client money or client assets. For example, what management comes to mind. You can be a small firm acting as a management company while having your assets with another licensed institution that have all the systems and requirements to do the activity, and having much lower requirements for the managing license itself. So if you make these distinctions across the different activities, that would help a lot in bringing more market entrants.
I agree. That's a good point. In fact, with respect to the limited brokerage model that you're suggesting, that's what I would call an introducing broker, how we would define an introducing broker in Canada, where the back office is handled by another institution. This licensing model is flexible enough to accommodate that, and the way it would be done, such a firm might only be doing, for example, dealing and advising with a set of retail clients, and then the licensing requirements would be applied having in mind that's all they're doing. They're not doing anything else.
Hello. Shadi Salemi from the Beirut Stock Exchange, the legal advisor. I have 3 points. The first point is a question, no, a remark. In the Lebanese Commercial Code, the Article 117 states that there is 1 share, 2 votes in one case if it's the share is owned for more than 2 years by the same shareholder. So I think you should take it into consideration. The second point, it's a question about the difference between market making and liquidity agreement. You've mentioned in Annex 6 that there is a difference between the two activities. The third point, as a stock exchange, what should we expect from our brokers to give us a license of dealing as agent or the other license for as principal? And when should we expect this? Thank you.
Hope I've understood the questions. First of all, let me take the market maker versus liquidity provider. And this is from international standards. I don't know exactly how those things are defined here. But in general, a market maker is a person or a firm that needs to have an ongoing presence in the market to make quotes and provide liquidity in situations where there's a lack of liquidity or no bids and offers. A liquidity provider is generally considered to be a firm that will respond to a request to make a trade as principal in order to provide liquidity to a client. So, at least as I would understand those terms, they're two quite different things. As the other question was about what type of license does a member of the exchange require?
Yeah.
Well, I guess at the end of the day, the only absolutely necessary license would be dealing. With the CMA, they'd know whether they were going to deal only as principal or only as agent or both. I would assume that you would hope that members would be licensed to do both. But let me stress that this licensing regime is for CMA regulatory purposes. There would still be membership rules for the Beirut Stock Exchange that you would apply.
Those rules would be approved by the CMA as such.
Well, yeah, I guess any rules of an exchange would need to be approved by the CMA.
May I just the third comment, did I understand you well? The first 2 years, your vote,
one share,
the other way around. One share,
two votes. Yeah.
If you keep it for 2 years, then it's all. Yeah. Okay.
You're referring to the controller definition?
Yeah.
Yeah.
Yes, we'll look at it. We'll see.
Soraya Mashnu, attorney. I want to dwell for a short while regarding the cross-border banking, which we talked about a while earlier. We've had at the firm in the past year, mainly lately following the crises, a lot of foreign banks who are established and licensed in their respective jurisdictions, who sent us questionnaires. I'm talking over 17 entities and prominent banks, about whether there is in Lebanon a cross-border banking regulation. In other words, they're asking whether they can market financial products, not necessarily of investment funds, but other types of products that are issued by such banks in Lebanon, whether online is one form, of course, but also by soliciting actively clients here live or holding seminars or conferences or other forms of maybe subtle marketing, if I may. And typically our answer from a legal standpoint is that these matters are not specifically brought under a given circular, but rather they're in a gray area, because there's nothing that specifically prohibits a foreign banker from coming to Lebanon and talking to 20, 30 people or holding a conference in a hotel. And the reason we say so is because they have very specific questions, as you may suspect. They're asking literally if they can come to a hotel, talk to 5 people, and if they do, will they face sanctions? So I understand Mr. Carson's point that there's a big difference between actually an SEC rule and its implementation. But I think, in my opinion, that there should be a rule. Whether it is implemented or the sanctions are actually being enforced is something else. But I believe, and much to the Saudi case, I think if memory serves me well, in Saudi there's a specific prohibition of cross-border banking. So I think, much like the SEC rules, they stretch cross-border. And whether they're applied or not is an enforcement issue, but they exist and they specifically prohibit these types of activities. And that, in a way, gives comfort, if I may, to foreign banks, because they know that for sure they cannot do this. They don't get mixed advice from several lawyers, some of them telling them, well, this is a gray area because the text is not very clear, and some others telling them, you know what, go ahead and do it because nobody's ever been sanctioned. So I believe clarity is due in this respect.
Okay, that's a good point. I mean, as I mentioned earlier, the rules on marketing or securities advertising should capture the kind of example that you provided. You stated that those meetings were being held here, correct?
Yeah.
Right, so it should be captured, but what you're saying is there's a need for a more specific rule on this point. Okay.
If I may interject, I'd like to quote Article 2111, securities advertisement. A person must not make or communicate any securities advertisement to a person in Lebanon unless the first person is an approved institution. Number two, a securities advertisement is made or communicated to a person in Lebanon if it's directed to a person in Lebanon. Only an approved institution may use the terms so on and so forth. So the regulations, the draft already is clear that this particular scope of business activity is defined by the institution and is defining as well the registered person. Moreover, you've hinted or highlighted the clear requirements in Saudi, right? Even to a certain extent, they've modified the regulations to say recently that if a company decides to send their representatives to Saudi and they're not licensed, they made a publication public to all investors, being whether you are a Saudi citizen or just a resident in Saudi. If that particular institution or person is not registered, يعد العقد لاغي. So anything that goes under that contract is null and void.
Yes.
More importantly, this is not just Saudi. So if you go to the jurisdiction in Canada, for example, so if I'm living in Quebec and I have a client in Ontario, I have to have my license. I'm just picking on you here. I have to have my license literally approved by the regulator and we're still working here in the same country, right? That I have to have my registration as a license approved by that regulator. If I have my client who signed my KYC and documents in Quebec and happens to be a snowbird, we call them as such because for obvious reasons, so, and he goes to Florida, I need to have my license 63, the Blue Sky license, to make sure that that particular registered representative can follow his client in giving him advice under a document that he has already have as a relationship with this particular individual.
What if they just throw a party and collect business cards and have somebody looking?
Yeah, I mean, the best solution is to do it over a yacht. This way the jurisdiction is in the water.
Okay, well, we'll take that point and discuss it internally.
No, I mean...
What I mean is I can't give you a definitive answer. We thank you for your comment, and we're going to discuss it and see where we come out.
You want to say something on this? Okay.
I mean, on this point, this is very important, the consultation process. Like, I mean, certain regulators around the world, they have different mechanism on how they adapt or implement the consultation process. And the common sense, usually, at least to me and to John and to the board, was we want to open this communication process with you guys, listen to you, and really, this is not a lip service. So we're going to take the comments. I mean, I remember at one point in time, and once again in a different life, we used to have what we call ACTIM, Advisory Committee to Management. And we used to always say, you know, advisory doesn't mean that you have teeth in it, right? But what we're doing over here is contrary. So we're opening this, inviting all input that can come in so that we can reflect on it under a work group team And then whatever recommendation we take, then it has to go back to the board of the CMA, and the CMA will have to decide whether they go ahead or not. You sent it to us?
You will. Okay.
Yes.
Then, okay. Very good. Just. Yeah. Taken. Well taken. Well,
maybe the expansion, to me at least, the principle is clear, but maybe subject to your consideration, the implication could be subject to better expansion.
Okay.
The implication of violating the principle. Okay.
Well, thank you all. I just want to ask you one more time to send your comments, remarks on anything through your associations so that we can benefit in the review. And we will see you tomorrow, hopefully. Thank you.
Thank you.
Thank you.